Hi, this is Chuck Schaefer, and in this video I'm going to show how CRM can be used by financial services companies to manage Fatca, which is the acronym for the Foreign Account Tax Compliance Act, and one of the newest compliance mandates being pushed to nearly all global financial services organizations. From an operational perspective, there's no real consensus on how financial service providers or FFIs are responding to this challenge, but I think the key here is to recognize that building yet another custom application or performing more systems integration is going to incur more IT cost and manual effort than the more strategic option of achieving Fatca compliance within your CRM application. CRM, of course, stands for Customer Relationship Management. Fatca is a customer compliance objective. Managing customer compliance outside of the customer management system, or in this case, doing Fatca outside of CRM, is a recipe for redundancies, manual processes, fragmented systems, and increased IT cost. Here's a CRM application I designed to meet Fatca compliance for a financial services company headquartered in Barbados, but with offices throughout the Caribbean. Like most CRM applications, we default to a particular dashboard, generally by resource or role, and in this case I'm defaulting to a Fatca dashboard. It's showing several views or panes. What I'm first looking at is the incomplete KYC report. This is particularly helpful as in the demo I'm going to show you now, we've embedded Fatca compliance into the KYC process. So we're effectively killing two birds with one stone. To the right, I'm looking at Fatca recalcitrance, one of the many Fatca required reporting elements. Below, I'm looking at the Fatca Indicia clients. Those are all of the financial services clients that are meeting some of the primary Fatca Indicia criteria. To the right of that, I'm looking at Fatca US clients for another one of the Fatca reports. And if I scroll down a little bit further, I'm looking at PEP clients, and I'm also looking at clients that exceed particular Fatca designated thresholds. In this view, I'm looking at those clients that exceed an annual average aggregate balance over $1 million. That is a high-end Fatca threshold where the requirement suggests that more due diligence is required because these are considered high-value accounts. But there are many other thresholds, both in aggregate sums and by transaction types. So as an example, if I click this drop-down, I can say, well, also show me the aggregate balances exceeding $250,000. Or I can look at particular transaction types and balances. So in this case, show me all threshold deposits exceeding $25,000. Again, there are many aggregate balances, there are many transaction types which are going to trigger particular Fatca compliance mandates. Okay, let's begin to move into the client contact records so we can begin to see how we can include Fatca compliance measures into the normal KYC processes, as well as how we can also apply significant system automation to decrease process cycles and really cut down on a lot of manual efforts. Now I'm looking at some client contacts. I'll go into the example called Maria Campbell. In this particular contact record, I'm seeing a number of things. At the top, I'm going to first focus on some key performance indicators for the client contact record. In this case, I've chosen them to be customer type, primary line of business, whether this client has Fatca Indicia, and who is the owner, agent, or services advisor. Under that, I've got what we call a KYC process guide. I'll expand that, and you can see that in this particular KYC process guide, I've organized it into 5 stages, where each stage has a number of user-defined steps. In stage 1, I'm looking for contact information to be acquired, first name, gender, telephone, contact information such as addresses and the like. In stage 2, I'm looking for a number of documents to be created or to be completed. Stage 3, I'm looking for demographics. Stage 4, I'm looking for citizen information, which of course feeds Fatca compliance as well as AML and some other things. And in stage 5, I'm looking for occupation information. The services advisor or the agent can work through these processes sequentially. I can make some fields required. I can do what's called stage gating, which prevents advancement until some fields are actually completed. But this is a user-defined part of the KYC process that includes or embeds Fatca compliance measures. If I close that down and I begin to look at the rest of the client contact record, I'm going to see some summary information. In the middle, I'm looking at some activities. In this case, I can see that we have verified their national ID, which happens to have been a TRN. I can see that we have verified their driver's license verification and included a photocopy attachment. I can see that we have verified their national ID number and included a photocopy attachment, that we have verified passport information and again included a photocopy attachment. I can drill into these to see those account records or details or those photocopy attachments. To the right, I'm looking at particular financial services provided to this customer. If this customer also has incidents with our organization, I would see those related cases if we were using the CRM customer service portion. I'm going to scroll below and start to look at some of the more Fatca specific measures. Below under details, I'm first capturing demographics. Secondly, I'm looking at identification. Here we're back to tax IDs, and in this case TRN. We're looking at particular identifiers that are required as KYC, also required for Fatca. And over here again, I'm looking at documents that need to be completed as part of the customer onboarding. If I scroll down a little bit further, I'm going to see the compliance measures. First, nation-state affiliations. And some particular fields that have significant Fatca compliance here are W8, W9, and PEP. W8 is of course used to demonstrate tax exemption. W9 is to request a tax ID number, and PEP is a sort of an ancillary matter but has implication. PEP of course is politically exposed status, and this field is generally populated from either another database or possibly a list provided by the UN, the US government, or another source. When the PEP field gets checked, a workflow process kicks off actions that stop the KYC, suspend any onboarding, freeze the client account, notify related lines of business, and specify processes that this person can use to prove their identity or that they shouldn't be a PEP designee. In the next section, I'm looking at the Fatca indicia criteria. Interestingly here, if these change, then of course that is going to change my Fatca indicia, but not necessarily my Fatca status. Fatca indicia may or may not correlate with Fatca status based upon regulatory business rules. Even if all Fatca indicia fail to designate a U.S. tax affinity, other KYC or onboarding activities can trigger the Fatca status to be a U.S. individual or more likely a recalcitrant individual. For example, if a client is unable or unwilling to demonstrate proof of address, as generally again as part of the KYC process, or any other Fatca requirement, the system will initiate compensating controls, such as a W8 verification, and continued noncompliance will change the Fatca status change the Fatca status to recalcitrant individual, even though there are no Fatca indicia matches. Also, the Fatca status update to recalcitrant individual automatically initiates additional activities, such as notifying the lines of business of the updated client designation and the process to begin the reporting and the withholding. To the right of that, I'm looking at AML information. Again, this can vary by financial services organization, but there's a lot of similarity here. And under that, I'm looking at particular products acquired by Maria Campbell. Now I'll link into one of the client's financial products, and in this case I'll choose the life insurance policy. What you may notice here is that I've created an onboarding process for life insurance policies, which consists of 4 stages, from the application information to be acquired, to the quotation task to be completed, to the underwriting task to be completed, to final acceptance. And in this case, the application information is indeed complete. These tasks are effectively done. I'm currently then on the quotation, and what you can see is that I've completed most, and most recently acquired a premium amount, but the premium has yet to be accepted. Normally what would happen after premium calculation is an email goes out to the client, asks for acceptance or rejection. If the client accepts, this field gets changed to yes. At that point, this task is automatically forwarded to underwriting for their review and processing. With that, I'll drill back to Maria Campbell. What I've attempted to show you here is essentially a 360-degree customer view where we are able to see the complete KYC process, the onboarding process, the client's complete contact information, and below the financial products that they have with our organization. Let me now move from this central 360-degree customer view to show you some of the business process automation that I've referenced thus far. What I'm going to do is go into a particular feature called processes. And specifically, I'm going to look at some of the workflow automation that I've referenced. Let me first start with life insurance premium accepted. This is a business process rule that I referenced in the life insurance premium calculation task. And specifically what it says is if that premium is accepted, I then want the system to assign a task to the underwriter. Clicking this View Properties button, I can put the definition or the specific content for that task. And I'm saying to the underwriter, please review the insurance policy for a dynamic value of the contact name and their particular onboarding ID. I'm putting in a message that references the same, and I'm putting in a link so they can automatically go look at that record if they so choose. The other things I'm doing are, in this case, I'm creating an email to the underwriter to notify them that there is a new life insurance policy for underwriter review. And I'm also scheduling a reminder for myself to follow up on this in a specified time to make sure that nothing slips between the cracks. The second part of this process is ultimately the underwriter acceptance. So if I look at that particular workflow rule, I'm saying that upon underwriter acceptance, when they accept that particular life insurance policy, then I want to automatically send the customer email, a customer email confirmation to the customer. And if I want to look at the format or design of that particular email, I can choose to use a template where I can say that your policy has been accepted and will become effective the first date of the next month, or whatever I choose it to be. Another very common process, I'm actually going to change my view here, is the W-8 process. This gets a lot of leverage within Fatca reporting. So I've got a W-8 request. When there is questionable information or lack of verification with a particular client, I can give them a W-8 form request so that they can demonstrate that they have no affinity to U.S. tax jurisdiction. However, if they fail to demonstrate that, then triggers need to kick in. In this case, I'm saying that once I give them the W-8, wait 60 days for response. But if there is no response after 60 days, I need the system to take some action. In this case, I need to update their Fatca status as a recalcitrant individual. I need to send an email notification to various lines of business that need to know that information. And I further want to create a task for particular lines of business so they can include that in reporting and begin the withholding process. I've got similar verifications for W-9 forms as well. And perhaps the last process that I referenced that I'll show you is the recalcitrant individual. So once that happens, once a client is designated with Fatca status equal to recalcitrant individual, then a number of other system tasks need to kick in. In this case, I need to send an email notification to the lines of business. I can format that email with dynamic content as I see fit, and I need to begin the process of actually the withholding of 30%. So again, this can all be automated in the background by the system as opposed to people having to do manual activities or remembering to do these things. The last thing I'll show you is a number of Fatca packaged reports. When reporting to the IRS on U.S. accounts, not only should the details of the holder be provided, such as the name, address, and tax ID, but also the account numbers and balances of each applicable account, details on the gross receipts and gross payments and withdrawals throughout the year, and other similar financial balances data that can trigger Fatca indicia or Fatca status rules. We've created a number of reports within the CRM application to do just that. And with that, hopefully I've given you a glimpse of how a CRM application can be appended to accommodate Fatca compliance while at the same time maintaining that central 360-degree customer view.